2026. What's my opinion on the market in 2026? Do I think we're going to have a great year, an okay year, a bad year? Those sorts of things. Let's discuss it here. First off, everybody that celebrated Christmas yesterday, hope you guys had a great one with your families and your loved ones. I know I certainly did. So, 2026 is a tough one for me. For a few reasons. One, we're coming off of back-to-back great years in the market. We had 24% upside, 23, 23% upside, 24. We had 18% upside this year and 25, right? So we've had three banger years all in a row, and those are S&P 500 gains. NASDAQ's been even stronger. So three great straight years. More rare to get four straight great years, right? So that's something to keep in mind. Another thing to factor in is basically every single Wall Streeter and every single Wall Street firm out there is insanely bullish going into 2026. They're almost all expecting double-digit gains for the market. That's problematic. Why is that problematic? Well, it's hard to get people over to the bullish side now at this point in time. Very, very difficult. Like, everybody's on the bullish side. If we went back 3 years ago, it was overwhelming bearishness in the market. Like literally 3 years ago today, overwhelming bearishness, which actually sets you up for a bullish scenario, because if you can just start pulling some people over to the bullish side, you can get the market to start to move up considerably, right? Especially after a massive sell-off like we had in 2022. So that's something to factor in there. Now it's just difficult to pull people over to the side. Now, something we do have working for us in 26 is definitely like big tech, right? Big tech are the biggest stocks in the market. They should have good earnings throughout 2026. They should have nice revenue, right? Something we have working against us is if we do have a black swan event that comes out of nowhere, right? It's going to be very painful because everybody on Wall Street's already bullish. The fund managers are all bullish. The Wall Street firms are all bullish. So if you have something that comes out of nowhere, things could flip really, really darn quickly. Something we have working for us is we already had a very volatile 2025. And so the chances you have back-to-back years of insane volatility, pretty low. So that's why I'm kind of, if it's an up year in the market, I only expect single-digit gains. I don't expect double-digit gains. If we get it, great. I don't expect it. I'm calling for like 6% upside on an up year. If we go down, double-digit down. Let me show you something. Few videos you guys might want to check out. Stocks that have the most upside, in my opinion. That video there, that 48-minute beast, you might enjoy that one. Time is running out. This is your investor's last chance before December 31st. That video there. This video here, my predictions for best stocks in 2026 and overall market performance. You might enjoy that one. And this one, how to scale to $10 million plus net worth. Thank you, everybody that smashed the like button. Thank you, everybody subscribed to the channel. Enjoy those big beast videos. Much love. Talk soon, and peace.
So this is how I'm planning on making at least $3,000 a month in the stock market in 2026. First, because I've been investing for a while and I have a couple thousand shares, I'm able to use my shares as collateral to sell cover calls. This basically gives me the option to sell my shares for a certain price and by a certain date, and in return I get paid a premium. I usually get paid a couple hundred or a couple $1,000s a month depending on the stock and the volatility in the stock market. This was something that I did a little bit more of back when I was a public school teacher and I wanted to supplement my income. Second, because I'm a long-term index fund investor, my portfolio will naturally rise over time due to the asset appreciation. In fact, if you've been following me for a while, my portfolio went up around $200,000 just in 2025. Third, because I'm not comfortable having all of my money in the stock market, I like to keep a little bit of cash in money market funds like SPAXX from Fidelity. I personally like Fidelity because it automatically invests your cash into this money market fund and the interest rate is pretty good, between 3 to 4%. Fourth, I'm a big fan of dividend paying assets like Walmart, Costco, Visa, or even ETFs like SCHD. The current yield that I get right now is around 3.8%, meaning that I get paid around $1.05 for every one share that I own. And if you were closely paying attention, this is basically my paid strategy where I get paid from premiums, asset appreciation, interest, and dividends. If you want to start investing but don't know how to start, comment invest to join my next beginners investing workshop today and tomorrow. See you soon.